Hello and welcome to Las Vegas to the 6th edition of the Infrastructure Summit by Structure Research. I'm now joined by Jonathan Atkin, Managing Director for RBC Capital Markets. And Jonathan, finally got you on camera.
Yeah,
It's been, 9 years to get you on camera? So thanks so much for doing this.
Thanks for the opportunity.
No worries. So we are in the Infrastructure Summit. The theme for the conference this year is concurrence. So meaning two or more things happening at the same time in our space. This is now a wave of transformation. We have regulation, policy, energy, supply chain constraints, AI demand, neoclouds, you name it, it's happening. There's a lot happening in the industry. But in your opinion, and from what you see in your global scope, what do you think are the 1, 2, 3 major trends that are really going to shape the development and the growth of data centers in the next 12, 24 months?
So I think continuing, I'd say linear but not exponential growth in cloud, continuing linear but not exponential growth in social networking, and then more than linear and perhaps approaching exponential growth in AI. And I think AI training, AI inference. I think the distinction sometimes is artificial. Sometimes inference takes place where training takes place. We can talk about that later if you'd like. But that's going to be a demand driver. I think for at least another 2 years, and perhaps even longer. We'll see. Kind of how the use cases evolve.
Okay. When you look into the finance and investment side of the industry, I mean, there's a lot of capital flowing. We went from a few millions to a few billions to hundreds of billions. Now we are talking about trillions. I mean, what sense do you make out of all this? Where are we heading with it? Are the headlines exaggerated? What's your take?
So if you look at just the hyperscalers themselves, it's multiple hundred billions of investment each year just for growth. A lot of that underpinned by accelerating AI demand, but also cloud revenue growth is double digits for most of the major platforms. So I think it's a lot of growth orientation. And then if you add to that the investment that's needed in the electrical grid, because the barrier to this is not chip production so much, and it's not lack of demand, but the supply constraint in most jurisdictions across the US, most of Europe, and parts of APAC would be energy transmission grid constraints. So if you add that to the investment picture that utilities are making, then it grows even more. So a lot of it's reinforcement of the grid, and then a lot of it is obviously data center construction, and then GPU purchases as well.
Okay. Picking up on the energy, I mean, of course, energy is always the first thought for everyone in this sector right now, because it is an energy business ultimately. How are you seeing the financing of energy infrastructure change from a data center hyperscaler co-location side? We are starting to see some hybrid approaches where most of the hyperscalers go and build their own solar farms, they build their own energy to power their operations. From what you're seeing, are we going to see this spread out into the co-location side, into the leasing side as well? Will we see, I mean, without wanting to go into specific companies, but like the Equinixes of the world, the Alliance of the world, are we going to see those companies going into building their own energy, because you can't wait for the grids for 5, 6 years to build what's needed in 6 months? Yeah,
I think to a degree there's on-site generation that's being invested in by both listed and unlisted companies. There's less of it than you might think, but certainly a lot of potential there. Fuel cell projects and so forth. So I think that's definitely a part of the picture. And by the way, this predates AI, so a lot of this investment in renewable PPAs and so forth happened going back 5, 6 years. But I think AI kind of puts a fine point on it and kind of accelerates this trend that was already happening.
But when you sit with people around the world, and of course you cover North America, you cover Europe, you cover APAC and a few other regions, the Middle East, when you sit down with people putting the cash to work, how would you rate, evaluate, describe the sentiment towards being part of this sector now? Like what keeps them up at night and what keeps them happy in the morning?
So you're talking about the capital providers?
Yes, on the money side, yeah.
Yeah, so I think folks are looking for, they look to the U.S. as where there's going to be the preponderance of continued growth in AI. We have a lot of land, we have a lot of power. It's not without its challenges. And then there's parts of Europe and parts of Asia that are viewed as emerging AI hubs. But if you want to measure it by megawatts or gigawatts, you are not likely to see the regular flow of gigawatt plus projects that we currently see in the US repeated in Europe. And we're just seeing maybe the signs of this in parts of Asia. Perhaps India will be one of the first. But then there'll be certain jurisdictions, whether it's Australia, Malaysia, India, or Japan. Those might be kind of the four major AI hubs that we can identify currently. And then in Europe, it's a lot of AI inference among the flap markets that we're used to, as well as places like Milan and Madrid. But Southern Europe and the Nordics is where you might see larger GPU clusters. So AI is making the Nordics perhaps a little bit bigger than it otherwise would have been. And then we'll see what happens with Southern Europe. But that's in brief, that's kind of where I see the investment flows and the investment interests headed.
The Nordics itself is a very interesting case because it's having a second coming, because they grew a lot during the mid-2010s. Then it kind of stagnated a little bit, or at least it didn't make as many headlines. But in the last 12 months, it's all coming back again with massive deployments. I mean, we've seen NVIDIA going there, Nscale going there. Speaking of which, and of course, the theme here, we've already gone through it, concurrencies, a lot of things happening. But some of the conversations here have also touched on the AI bubble. The question is very simple: AI bubble, yes or no?
No, I think we have another 2.5 years of solid growth. I don't see demand tapering off. I don't see investment tapering off. Don't see a risk of oversupply. But I think the first signs that I'll be looking at is when we see the first replenishment cycle. We've yet to see an equipment replenishment cycle in the AI era. And so when the H100s that were being ordered a few years ago, that started to get deployed 2 years ago and 1 year ago, and the GB200s and so forth, these things only last for 3 or 4 years. And if you have a $100 million data center, the kit inside it, in terms of racks and servers, is usually 3 to 4x that, maybe even higher. And so when these big hyperscalers begin to examine their capital budgets in a couple of years' time, they won't just be spending for growth, but they'll be beginning to think about replenishment. And they're going to be asking themselves the question as to whether there was significant return on that investment or not. But between now and that time, I don't see any diminishment. But it'll be interesting in the year 2027, 2028, around that time, you'll see from the demand, from the kind of the CapEx budgets of the Googles, Amazons, Metas, and others of the world, whether they're seeing good returns on that investment, in which case they'll continue their investment for growth, as well as the replenishment on top of it. But if they decide that it's the jury is still out, or they're not convinced of the returns, then we might start to see a little bit of a cresting or a plateauing of this current wave.
But not a fall off the cliff moment. It's not a dot-com bubble like the 2000s.
So this gets a little bit to where are these GPU clusters? And so if you made a big bet in the middle of nowhere on a neocloud, then you might have a problem. We'll see. But if you made a big bet in an established market, suburbs of Chicago, suburbs of Washington, D.C., or West London, or whatnot, then there's a backup use case, and that's called cloud, in which case I don't think there's going to be any kind of residual value risk. But the more remote locations, depending on who the customer is, that I think will be interesting to kind of observe over the next several years.
You've touched on a few things I was going to ask as a follow-up question, because neoclouds, they started to change the game a little bit. So my first question would be, what's your take on neoclouds? What's the impact that they're having on data center development, investment, shaping the markets? But two, some banks are still are not buying into the idea of a neocloud. And I guess it's because it's a nascent idea. There aren't a lot of use cases out there, fully accomplished use cases, so they're probably just being reluctant to jump right in at the moment. And you correct me if I'm wrong or not. So what's your take on neoclouds, and how are the investors looking at it at this stage?
So there's one large financial sponsor that's been willing to back a neocloud provider, and then equally significantly, if you just go back a short number of like 6-7 weeks, you've got Microsoft Nebius, you've got Google FluidStack, you've got OpenAI and some of the projects they're doing in Norway and the UK with Nscale. So those are all public examples of big model builders or major hyperscalers backstopping and providing commercial credibility to these neoclouds. And then NVIDIA continues to invest its own capital as well. So I think that gives this category another couple of years in which to kind of prove itself.
Okay. If you look into 10 years' time, so in 10 years' time we're going to have nuclear plants working, powering the grid. We're going to have some bridge solutions in between until then. But in 10 years' time we're going to have nuclear plants. We will have developed probably the first major more than 1 gigawatt, 2 gigawatt plus campuses in some places of the world. But from a personal perspective, that makes sense. From your perspective, How do you envision the industry in 2035, in the next 10 years?
So I think that by that time, a lot of the energy challenges around generation because of nuclear will have been largely addressed, and then you'll have the transmission grid kind of upgrades that are needed. A lot of that will be complete. So then you'll see a little bit more balance in the market where supply and demand might be in greater equilibrium, whereas now I would say the demand far exceeds supply. So if you look at just from a data center developer standpoint, rent is still at elevated levels. The returns are much higher than they were a couple of years ago, and I don't see any signals now that you're going to see a tightening of returns. But in 10 years' time, with this equilibrium happening, it could happen. So the unit economics could become a little bit less attractive than they are now.
Yeah, but it's still not a negative message, which is the beauty of the industry.
It's hard to say 10 years out what the use. It all depends on what the use cases are.
No, that sounds good. What's the one question that I've not asked you that I should have asked you?
I think we kind of hit most of the major ones around the grid, around kind of capital flows and so forth. But I think the appetite to invest in this sector continues to remain very strong, and we'll see what new pools of capital come into being. And I think joint ventures between existing developers and say sovereign wealth funds, I think there might be more of that to come, and then we'll see what happens. I think that's kind of most of what I can think of.
Actually, the one about the JVs, that reminds me of new entrants to market as well. Do you think the industry has a lot of space for newcomers, or has this become, the entry ticket now is very expensive to go and build a data center business, but how do you view the startup side of the industry going?
Yeah, so I don't know that there's room for another large foundation model. XAI, from where I stand, might be the last one.
Yeah, but so they have a huge market behind it.
So a lot of well-backed companies that are building models that I think continue to have staying power. The hyperscalers, I think, in many cases, are directly sponsoring them. But I don't know that there's room for like a new one. So I think creative use cases around inference creates an opportunity for maybe new businesses to come into being.
Okay. Well, Jonathan Atkin, Managing Director for RBC Capital Markets, thank you so much for talking to me after 9 years. Thank you so much. As for your home, thank you for watching, and do check our website and social media for the latest digital infrastructure news from across the globe. At Tech Capital, you lead, we report. Bye for now.